But of course, also we need to also salute you, because this is what is on the front page of the Business Daily, having ways, innovative ways of actually raising revenue for the counties as well. And this is where we applaud you, the governor of Laikipia. You can see a sidebar story. Laikipia set to float first 5 billion shillings county bond. It says Laikipia County is on course to making history with the proposed sale of 5 billion shillings infrastructure bond to bridge a financing deficit. If successful, the bond, which is to be sold through the National Treasury, will make Laikipia the first devolved unit to raise money from the capital markets. Let's just hear straight from the horse's mouth instead of just reading the rest. But you should buy the Business Daily. And I'm not saying that everybody...
Thank you, Debarl. No, the reason I laughed is because of that sentence,
yes.
To be sold through the National Treasury.
Yeah.
I mean, that's not quite accurate. I mean, the bond is sold in the market.
In the market.
As a normal bond. But the point is, of course, that the way counties borrow involves the National Treasury providing a level of comfort. It involves the Intergovernmental Budget and Economic Forum to approve this borrowing. So that was the reason for the laughter. But the background of this, just yesterday, we as a county became the first county to publicly release our financials. That typically counties have been, if you will, on the back foot, people wanting to see what are your financials, and then the county perhaps not being forthcoming. And yesterday we made history of being the first county to publicly release our audited accounts, but also our unaudited 2017 2018, which themselves are under audit as we speak. Because we do want to prove the case that nothing says that public sector cannot have good financials and financial reporting that is timely. Today, in fact, we are in the FIRE Awards. Our accounts are part of the FIRE Awards today, and we have great expectations. Now, we do expect in the approximately 12-month period to go to the market, to look for monies, to do specific roads and specific bulk water storage facilities. And, you know, when you think about counties, and I'm glad Gabriel is here, because, look, counties are a bigger entity than municipalities. And you know, traditionally, municipalities have been able to issue municipal bonds, provided that the municipality is well run and that we can see, you know, there's proper and prudent financial management. And counties are actually a bigger entity than municipalities. And therefore, counties ought to be seen as a better bet from a securities point of view. And you will also know that right now in the market is a bit hungry for bonds other than national government bonds. And the corporate bond sector is practically, you know, is limping at the moment because of certain things that has happened say in last year and the year before. So the market is hungry for bonds. And I think that this is a fantastic opportunity for counties. And certainly, Laikipia County wants to be out in the market. And we know that Kenyans themselves are looking to us to have creative, market-based ways of financing critical pieces of infrastructure. In a more immediate term, this December, as you know, the pooled water bond is going to go on the market. And my water company, our water company in Nyanyuki is part of that, where we are going to the market as a group of certain utilities to raise monies to improve the provision of water. In the sort of also immediate term, meaning like 4 or 5 months, we'll also be back in the market looking for a PPP partner to build the Nyanyuki bulk water project. So build a dam, expand the treatment works, expand the distribution network and so on, and recoup that investment from the tariff of selling the water. And we are just about, jointly with the National Treasury, to get a transaction advisor to help this transaction come on stream. So I think what the big story is that counties are stepping up as well-run institutions interested to participate in the market, and we hope that the market is also looking to us for those opportunities.
All right. So you actually want us to correct it that yes, it's not being sold through the National Treasury.
No, it's not through the National Treasury.
Of course.
But obviously the National Treasury, even the National Treasury itself,
yes,
when it sells the bond, when government...
You put it out in the market.
You put it out in the market. But it's a minor flaw.
But a very innovative way of actually coming up with a way of raising, you know, revenue for the counties as well. Instead of, this is what I was saying, we are not just having a myopic view, always waiting or with a appeal in hand from the government, give us. You need to be creative on how you can raise this revenue. Let's just hear from Debarl Inea.
Yeah, I think what the governor is doing is very commendable, and where they're getting it right is first they're cleaning their house financially.
Yes.
They are making themselves attractive to the market. There are counties who could float a bond and no one would even take a second look at it. But he's done the right thing. He's cleaned his books. As you say, he's the first county to open his books for audit. Now the market demand is quite high, and this approach of financing development through bonds clearly is a cheaper way of doing it than if you have to go to the bank to borrow money. For investors, this is attractive because there's no tax on it. Depending, I don't know what the tenure is going to be on this thing. I think it's still being worked out, but it's a very good approach. It's a very innovative approach. It's part of what I said earlier about raising local revenue. You know, you cannot continue to just rely on the National Treasury. You have to be a bit more innovative, a bit more creative, work with the Treasury. The Treasury will give the overall comfort because it affects the macro stability of the country when counties borrow, but especially from outside. But local borrowing should go very well, and just commend you for it.
Right.
Yeah.
And maybe the World Bank should come up also maybe with the counties, ease of doing business index for just
By the way,
so that we know.
First of all, it is there.
It is there.
It is there.
Oh, okay.
Firstly, they compared 10 counties.
Yes.
And that is being expanded. In addition, the bank and the CRA, the World Bank and the Commission for Revenue Allocation, do in fact have a program to look at the creditworthiness of counties. Yeah, so they are in fact doing, and these are the correct moves. And we ourselves, in fact, as a county, expect to be rated. We are shopping for a credit rating agency to look at how creditworthy are we as a county.
Right, and of course that also is a good spawning ground maybe for the manufacturers. Goodka, you can actually even weigh on this. If we have maybe the counties are opening up their books for auditing, and we have clean, of course, bill of health as far as financial statement is concerned. This is, of course, investment confidence that will come maybe from even the investors themselves. You can tell us more about that.
Absolutely. I think the credibility of the county as an investment destination is key. To this, I applaud the governor's efforts in making Laikipia County accountable, transparent, and trying to make it an attractive investment decision. A couple of words of caution on this. Infrastructure, whilst it's necessary, cannot give you the returns very, very quickly. So I guess there has to be some element of also probably giving possibly some financial incentives or investment, industrial park incentives and so on to attract investors into the county. The second part of this is a lot of the counties have relied on traditional what we call revenue raising mechanisms, whereby they put in charges to even move goods within the county and if goods are passing through the counties. This actually raises the cost of doing business, and I think there is a bill in Parliament to try and curtail or to ensure that the revenue sharing mechanism is fair, and counties don't just impose their own set of regulations and charges to make the cost of doing business very, very high for everyone.
And is that really predicated on the division of revenue bill? What he's really talking about, right?
Well,
could we take a short break? When we circle back, of course, we continue with you, Patrick, and we look keenly on that as well. It's 7 on the nose. We want to take a station break right now. And when we come back, of course, we continue with the discussion, looking at the state of the economy right now, what is happening. We'll be looking also at the cane farmers and some of the sugar industries that the government is saying should be, if they're going to collapse, why can't we just shut them once and for all? So what does this really portend for the manufacturing sector as well? Petroleum is up. How does that affect you this morning? Right, is up by 2 shillings and 30 cents up. So be aware, of course, as you're going to fuel this morning, paying at the pump, as they always say. Right. We take a short break right now. When we circle back, we continue with more. Right, welcome back. You're watching In the Market here on AM Live, where today we take a state of the economy, just a panoramic view of how the economy is performing this morning. And I'm holding court this morning with Patrick Obath, who is the Vice President of KEPSA Foundation, also a board member of International Chamber of Commerce. We do have with us as well the Governor of Laikipia, His Excellency Governor Ndiritu Muriithi. We do have also the Director General of World Bank, not World Bank, but the African Development Bank. This is Debarl Inea. Also, we have the Chairman of Kenya Association of Manufacturers. This is Sanchen Gudka. We continue with the conversation. I think we were to continue with Patrick Obath before we took a short break, right? Patrick, I hope you've not lost your track of thought so that we can also finish on that and go full steam ahead with other stories.
No, my GPS has rerouted, so I'm back on track now. So. But I was going to come from the point of view of the transparency aspect. The fact that the county has gone ahead to sort of clean up its finances, put it in the public, right, and attracted financing, or we're going to attract financing through that process, I think that is commendable. Yeah. But I think in the long term, right, the belief of the electorate in the county government will also go up. Because once that happens, and then that money is spent on projects, because already they say what they want to spend it on. Yes. When that hits the road and the people begin to see that money was raised, it's now being used on infrastructure, then effectively that whole, the belief that the county government is actually doing what it was elected to do, I think is a better long-term outcome of a very simple thing like going to use the bond mechanism, which relies on other people saying, giving you a tick. You're not sort of doing it yourself, right? So by doing that is a clever way, Governor, of getting trust, right? And once there is trust, then things will follow, right? And then with the other projects that I've heard the governor talking about in the area, once trust is there, then also investment will begin to come in into the county. So again, I think the one message that needs to come out of what is happening in Laikipia is that when you talk about investments in this particular kind of, in infrastructure and so forth, the payback of that is going to be quite some time down the line, right? So you have to borrow in a clever way that allows you to have that. So the county residents should not expect that all of a sudden Laikipia is going to be sort of, up and bouncing within the next 5 years. This is going to be a process that slowly grows the economy, and the better the infrastructure, the faster that growth will begin to come in. So I think the messaging around this should also be now beginning to educate the public around prudent fiscal management, right? And also the accountability and also the expectations in the long term. So I think this is just the beginning of a long journey, Governor, and I think it's a great way of starting it, just by building that openness in terms of saying we are an open county government and we are going to do everything out, and we're going to get a third party to give us the tick, not ourselves. So management of expectation is very key, because we can come out with this bond, but people will expect to see the fruits tomorrow.
Absolutely.
So how have you planned on how they can manage expectation?
Because we still have the same I think, blowbacks of SGR that we do right now. People were not really, prepared to how to manage this expectation. We thought like, wow, it would just be quick off the mark, and at a snap of a finger, we'll see the benefits of SGR. So how do you plan on this?
The positive side of expectations, Debarl, is that in fact the economy itself does run on expectations. When consumers are confident about the future, they spend more. When businesses are confident about the future, they invest.
Yes.
So there is, in real sense, a positive side to high expectations and positive expectations about the future. But I absolutely agree with Patrick that the real proof is in continued prudent management of our finances and of the things that we're doing. And you know, we welcome the market to look at what we are doing. For instance, Debarl, 68%, nearly 70% of our supplier invoices are settled within 60 days. Within 60 days. So the general view that counties don't pay is not true. Nearly 68% of our invoices are settled within 60 days. And you can see it with the renewed appetite by suppliers and contractors taking interest in the business that we put out there. When we put a tender, we are seeing a lot more interest. People wanting to do business with us because they can see that in fact we are living up to what we say. Also, on a point of view, on the investment side, some global brands are in fact in Laikipia.
Yes.
You might be surprised to learn Microsoft launched Windows 10 from Nanyuki, you know, some many months back. And that is because they are invested in a business called Mawingu, which is sort of uses TV white space to deliver internet to households. You would be surprised, global names like Princeton and the Smithsonian are invested in a research center inside Laikipia called Mpala. So Laikipia is attracting global companies, is attracting, as I was just saying, Vivo is a major investor in Nanyuki with a fairly nearly 3 billion investment in a distribution facility for fuel. So we are attracting you know, significant investments, and we you know, we will continue, more to come.
All right. Let me just ask Governor, how many investment conferences has Laikipia had?
None.
Exactly.
None.
That is, I was hoping you was going to say that because I've not seen any, and all this investment is happening.
Yes.
How many other counties have had countless investment conferences and nothing is happening?
Some of the counties actually have forged investment conferences. We know of a county that, yes, the governor was actually seeking some 13 million shillings, we know, for an investment conference that was not there. This was flagged by a bank, right? And even an MC was to be paid 800,000 shillings. So this MC was calling out on governor on radio, hey, please, can you give me this money? Because there was no investment conference. And then this governor is actually, you know, forging that there was an investment conference. But it brings to light also, Patrick, what you're really saying, because we've had Makueni with the universal healthcare. Now people will be streaming to Laikipia on how actually they are putting in place now the county bond. They want to learn about it. They'll come in the name of benchmarking. This benchmarking, Gabriel, you need to talk about it because this is where also you need a lot of money.
I mean, we welcome visitors.
You welcome.
We welcome visitors in Laikipia. And as a matter of fact, Debarl, by the way, when you want to visit Laikipia, just download an app called Destination Laikipia. It's free on Play Store. You go on Play Store, you put it on your phone, and it helps you to book hotels, to know where you're going in Laikipia.
Thank you.
Destination Laikipia. So we welcome visitors.
Governor,
but
no.
On a more serious note.
But Governor, you'll pay for this now show, so that now you can actually talk about Laikipia County to the fullest extent. Right? All right. Let's hear from Gabriel.
Benchmarking to Laikipia is much more affordable than benchmarking to Brazil.
Correct.
So because that seems to be the popular thing. But I think the key message, and Patrick talked about trust here, people trusting and so on. The most important trust here is the trust of the market. Indeed. And the market will bear out what the governor is saying. If when they float this bond, it's oversubscribed and the tenure is good and the coupon and so on, then clearly the market is showing its trust. Once you establish that, everything else will follow. So focus on ensuring the market signals a trust on Laikipia, on the management of the economy, on the management of the finances,
Thank you.
on the use of the revenue, then everything else will follow.
Let's hear from Sanjay.
Well, I think I applaud the governor's initiative to pay suppliers on time, because we have a fundamental disease in this country of paying late. Private sector pays late, government pays late, national government pays late, and county governments pay very late. So we have this whole culture whereby the velocity of money through the economy is so slow. The money turnover is just too slow. And if governments and private sector start paying each other faster,
yes.
you'll see a lot more movement in the economy, the liquidity crisis in the economy reducing, and we do need to do something about it. A 60-day payment time for about 60 to 70% of your invoices is pretty good, considering the national debtor days on average for industry at the moment is probably 105, 120 days. That means you can only turn over your money 3 times a year, which is absolutely crazy. And it's not sustainable.
Maybe also piggybacking on this particular statement by Sanchem, I think there is a regulatory framework that they were coming up. Is it a bill that, yes, the county should be, mandated to actually pay within stipulated, was it 90 days or 60 days? I think there was a sort of a bill that was being raised in the National Assembly. I cannot actually remember the specific bill. But as we're winding up on that, I think, yeah, that is a good salutary effort that should be put forth, making sure that suppliers are paid on time, because for the longest time, people, they've been listed by the Credit Reference Bureau because they're not really, servicing their debts or servicing their loans. And this has really made some of the small, medium enterprises really suffer in this country. The closure of them that we're given to understand for at least 2 million of them have closed in the last 5 years.
Right. I think that the bill has come primarily from the retail sector because of the way the supermarkets
do you have
were.
the name of the bill? It's,
even I have the name, but
Okay.
I know it has come.
It's not a
It's
bill.
not passed.
It's not a bill.
It's actually right now regulations. My worry is when you start having soft touch regulation on a hardcore matter like payments, it can, people like the retailers have taken advantage of it. What we do need to do is probably strengthen that mechanism and ensure penalties, etc., are in place.
Thank you.
For late payment. Yeah.
All right, thank you.